Yeah, I was actually unsure whether to call this the bad big data problem or the big bad data problem, because I think both are pretty relevant in terms of because there's banking's got a problem with big data, but it's also got a really big problem with bad data as well. And it's really I want to talk about some of those types of problems and how they got there and why they are there and what open data can do to fix this. I mean, banks are swimming with data. I mean, even apart from even putting the transactional data on one side, they're absolutely swimming in data. And the problem is not whether they've got enough data, it's whether they can use the data that they've got and whether it's in a form that makes it usable. And when you start talking to banks about the data, I mean, just a simple question, which is, given an entity, what do you know about it? And that's an incredibly hard question for pretty much every single major bank to answer. It's a problem because they've got huge amounts of siloed data, even apart from things like the acquisitions and so on that they've done, which obviously essentially is a really great way for creating silos. But even apart from that, they've got lots and lots of different siloed data. They've got both legacy data and in some respects more problematically legacy data models, which were designed when storage was incredibly expensive, was designed when memory was expensive, was designed when actually people hadn't got the same understanding, when the world was different. These days we live in a globally connected corporate world where every single major company has got hundreds probably of legal entities around the world and connected in all sorts of different ways, where they've got thousands of counterparties and so on. So, and these models just weren't designed to support that. Probably this is the biggest one for me, I think, is that their use of identifiers is at best inconsistent. Sometimes it's non-existent. They consider a company name to be an identifier, which of course it isn't. Companies change name all the time. And also companies, company names are reused. This is essentially, I got into this whole area of legal entity data because of coming across lists of companies and trying to match it to the list of company names and trying to match it to the specific companies, reconciliation. And the truth is the company names are changing all the time. And also, it used to be traditionally where you'd have AAA Plumbing, for example, would go out of business. And when it mattered where you were in the telephone directory, remember telephone directories? That when it mattered where you were in the telephone directory, then AAB Plumbing would change its name to AAA Plumbing. And so these days, it's much more likely that there's been a joint venture with one partner. Let's say Tesco Mobile. Tesco set up a company called Tesco Mobile Limited for its mobile service. They decided to change partners for that. They changed the name of Tesco Mobile Limited to Oldco. They create a new company, Newco, and then they changed that to Tesco Mobile Limited. And that sort of change happens all the time. So the fact that a company name is the same as another company name doesn't mean it's the same company. The fact that it's a different name doesn't mean it isn't the same company. There's no mapping between that's effective. And so in this context, identifiers become absolutely crucial. Yet the use of identifiers in banks, in large financial institutions, and actually even in government is highly problematic. They're incredibly reliant on black box proprietary data. And and this is partly historical, partly because they needed to get something sorted then and there, and black box proprietary data solved it or appeared to solve it. But it brings with it a host of questions. One of the critical things we think about open data is there's lots of benefits to open data. It creates a level playing field for innovation. It allows exit strategies and so on. But actually, we think one of the critical ones is data quality. So here are some common proprietary data quality issues. There are lots of different dimensions to data quality, but one of them is accuracy. Is the information, is what's written down there correct? The problem is that with proprietary data, typically it's rekeyed information. There are very few eyeballs on it because it's proprietary, because they don't want it to be spread widely. There are very few eyeballs. And actually in critical areas, and particularly things like beneficial ownership, where the bad guys don't want to tell the truth, then there's very little downside to lying, because the chances are you won't get caught. Of course, there are significant gaps in the data, and that's because the costs of assembling these proprietary data sets is quite high, and that cost is duplicated. So, for example, when you look at, let's say, a typical annual report for a UK company, then that's being rekeyed by probably a half a dozen, maybe 20 different companies around the world are taking that information, rekeying it, and turning that into structured data. And of course, they're only going to do that if they've got a guaranteed market for that. So that creates both gaps in types of data and in the data sets themselves. There's a lack of granularity, and again, data companies are. Many of these proprietary data companies have been around for 20, 30, 40, 50 years. They've got legacy systems, legacy data models, and these data models in a highly integrated world, proprietary world, are very hard to re-engineer as well. So, one of the largest proprietary data providers is still using, I think, for the US industry codes, is using 1987 standard SIC codes. Now, the world's changed quite a bit since 1987, and the industries we have today are somewhat different. So I think it's pretty clear to see that's not the right approach. Another company, one of the largest financial data providers, only considers something to be a subsidiary if there's a majority of the shareholding. Now, actually, most legal definitions of subsidiary don't consider that to be the case. And in some places, like in the Arabic world, where you have to have a majority local partner, effectively it means you don't have any subsidiaries. So those data models, which were based on assumptions, but also lacking that granularity, because that granularity took a lot of, took memory, or it took disk space, essentially storage space to use, meant that this sort of information just wasn't collected and wasn't stored. The feedback mechanisms are often quite weak. Here's a critical one that I think is the lack of provenance. Now, what do we mean by black box data? It means that you really don't know where this came from. You really don't know what caused this to be created. Now, of course, why is proprietary data black box? Why does it lacking this? Well, partly it's lacking it because, well, if they told you they got it from this official governmental data set, and this thing that they're charging you, $50,000 for something, they got it from this official data set, then they're worried that you'd go direct to it and you'd cut them out of the equation, or you'd think they were being overpriced. It may be because they don't want to be clear about where they got this data from. Maybe they bought it from someone else, who bought it from someone else, who bought it from someone else, who bought it from someone else. The dirty truth in the two dirty truths in the business information world. One is that the same data goes around and around and around. People buy it from, people buy this and then they do a little bit to it and they buy it from this, and actually, some people, have discovered that they end up buying their own data that's just gone around the circle essentially. And the second is actually getting hold of the data. Everybody scrapes. Everybody scrapes. Governments scrape. I don't know of a single major government that does not scrape data. They don't do a lot of it. They find it difficult because they're not very good at it often. But the UK has done it. The government digital services did it really, quite significantly, because in order to get the data it needed in order to do the gov.uk, essentially, it needed the data. I mean, we live in a data-driven world. Everything that we do, every website we're talking about, the whole reason we're here in this API conference is because we live in a data-driven world. And you need this as data. And so, they needed it, and in order to have got it from this department would have meant having endless series of meetings. So what did they do? They scraped it. Same with the US government. Same with the French government. This is, and actually, where does... how does anybody get the Delaware data? Well, they scrape it. That's the only way you can get it. But they don't want to say that, so they'll buy it from someone else, who buy it from someone else, who buy it from someone else, and that lack of provenance is really problematic. It means that you don't have true line of sight, and it means that you can't combine it with other data effectively. And finally, the proprietary data is isolated. They use proprietary IDs, and what is a DUNS number, for example? I'm sure most people here heard of the DUNS number. Anyone here who hasn't heard of DUNS number? Okay, so a DUNS number is an identifier created by Dun & Bradstreet, and is used as a really common identifier in the US government, which is currently trying to figure out ways of getting rid of it. And it's used as an identifier for businesses. But Walmart Inc. has got a DUNS number. Each Walmart store has got a DUNS number. A couple of people, working in the evening on an eBay site selling on eBay might have a DUNS number. And so all it is really, although it's used as a primary identifier by the US government, all it is a foreign key into Dun & Bradstreet's database. Now, unless you've got access to that database, full and unrestricted access to that database, foreign keys can be highly problematic. And they're certainly one of the reasons that the US government is thinking about moving away from it is that there are barriers to data sharing and there are barriers to improved data quality. So all this has a significant increase increasing risk. It also, of course, increases costs, and it reduces usability and blocks innovation as well. So the company I run, OpenCorporates, we normally describe it as the largest open database of companies in the world. Currently just tipped over 90 million companies in something in the region of 105 jurisdictions around the world. What we consider we're doing is building the underlying core data set of all company data. And specifically when we're talking about legal entities. So legal entities are the single most important data set in the corporate world, because the business world is about contracts. And you can only have a contract between two things that have the power to enter into contracts. Legal personality, it's called. That's why we have companies in the first place. So that you can have contracts. If it was just a question of, you had the contract with the manager, or even the owners, and so on, then suddenly when the owners change, then what do you have to do? What happens with the contract? What happens when the manager leaves? You need something, this strange idea of a legal construct that, despite it not being able to touch it, despite not being able to see it, despite not being able to put it into jail, has the power to enter into contracts, to have assets and liabilities, and actually to break the law as well. This is the critical underpinning, and this is the data set that we're fundamentally building. And we're desiling the data from corporate registers, but from other government data as well, particularly regulatory data. Linking it together. Some of these are quite obscure data sets, but nevertheless become quite important. One that we did a lot of work on was the US government, the Federal Reserve have a database of bank holding companies. And we had to basically deconstruct these 900-page PDFs in order to do this. And it turned out that we found quite a lot of problems with the data, which we told the Fed and which they've been in the process of fixing. This is the data set of the bank holding companies that the Fed knows about. This isn't that obscure, yet we apparently were the first people to tell the Fed that there were data quality problems in it, because we were combining it with other data. Fundamentally, what we're about is giving line of sight to primary data. When we say something, we're not actually, OpenCorporates isn't saying that the registered address is here or the subsidiary is this. We're saying that this official source says that. And that means that you can use it with clarity and with confidence. We have one entry per legal entity. Everything that we do is automatically ingested. We don't do manual imports. We are doing a little bit of manual work. For example, we're doing some really quite innovative stuff around the corporate structures, the complete corporate structures of the GSIBs. But that's to allow the data to come to be connected. And all of our core entity data and the other core data is automatically imported. Yeah, I think we're about 105 jurisdictions. We standardize the data to a standardized form. And I say standardized rather than normalizing, because what we always make sure that we have is the original data in there. We do mappings to other things. So, for example, there are lots of different ways of displaying, company registers and governments recording company status. But we map those to inactive, for example. We map, dissolved, rejected, liquidated, all of these different things to it. But you always have the original data. So we're very much about standardizing and keeping the original data and mapping rather than changing it. A common use is whether it's in due diligence, onboarding, investigations, making it searchable across jurisdictions, particularly somewhere like the US where everything's registered, incorporated at the state level. We do things like matching the foreign branches to home companies. Why do we do this? So a foreign branch being a registration of a company in a foreign territory. So Barclays PLC, for example, has got both subsidiaries in New York State, but also exists as a branch in New York State. And by connecting this together, you find things such as this company is supposedly active. The branch registration says it's active, but the home company is dissolved. But you also get things like the Delaware won't make the directors available, but you can get this because the New York Secretary of State's office, the New York Company Register, says you need to make the CEO available, and Mississippi says you need to make the directors available. So you can sort of pull this all together and triangulate this in a really useful way. We use company register-based identifiers, so it's non-proprietary, no monopoly, can be used even without reference to us. Our current focus, of course, we're continuing to build the core data set, and we hope at least to be able to get to, we'll hope to get to 100 million before the end of the year, but it's actually other company-related data in the world. And by public data, we mean things that are either published by that's published by a government or a governmental agency. And that could be anything, and that's anything from licenses, for example, bank licenses, mortgage broker licenses, licenses to operate a casino, and so on, to trademarks, to subsidiary data, to SEC data, and so on. And we're doing that match to the company. Well, API, given this is really what we're all talking about here, is how can we use the data? How can people use this data for innovation, to producing better user experience, and so on? Just before the Berlin event, we released a version 4 of the API. We're currently working on version 0.5. As well as all the data, we've been adding new features to it, searching by registered address, for example, partial registered addresses, filtering by strange groups of companies, strange groups of jurisdictions, for example, filtering by the whole of a country, all the multiple jurisdictions in a country. There's some quite clever filtering of inactive or branches and so on. Non-profit is a new mapping that we've added. So, most non-profits in the world are companies. They happen to be non-profit companies, but they're companies. And they will often have for-profit subsidiaries. And similarly, sometimes you'll have, sometimes the inverse may be true as well. And so we've been mapping all those different company types to non-profits. Searching offices by address. So we've got something in the region of 110 million officerships in OpenCorporates. And about half of those have got addresses attached to them. So that's from an investigation point of view, from a due diligence point of view, from a KYC perspective, that's pretty critical. Filtering by status, various things. Some fairly powerful industry code filtering that we're doing. There's some sort of things you could do with it. whether it's the name of the title, some rich groupings. Well, as a sample of this, as a test of this, we've only got dates of birth for the UK at the moment, but we did a search for officers who are over 105 years old, which is when this poster was done, but are still considered to be active directors in the company register. Those that are incorporated have been incorporated since 2014. That are non-profits and they've got political entitled. These are sorts of some of the rich groupings and searching you can do. And for example, we're mapping the UK and the Belgian distinct industry codes together, so you can again do some kind of cool filtering. Our business model is pretty innovative. Although we're a for-profit company, proudly a for-profit company, we also strongly believe in the public good, and what we're doing is important not just for innovation and for people like yourselves, but also it's important that everyone has access to this information. So everything on the web, in the database, is freely available on the web. It's essentially a cross-subsidy model. And that free access to on the web is important, not just because we think it's the right thing to do, but also it gives us quality benefits as well. So every day we get loads of people saying the information is wrong. In almost every single case, it's because it hasn't been updated on the register. Well, there's three types. There's people the company hasn't updated the fact that this director resigned, for example. There's things where people say it's wrong, but it isn't really wrong, and they'll just be telling us that when you tell them that it appears to be correct, they'll say yes, but it's not relevant. I don't want someone to know that my last company went bust. I don't want someone to know that that I was associated with this previous company. It's like, well, duh, that's why we make it available. That's why you want to know that you're dealing with these people and their last company went bust. Now, maybe there's good reason for it, but you should know that information. And also, there's been we're getting a consistent number of people who are discovering identity thefts through OpenCorporates. Everything we have is full provenance for all data and with a source and when it's retrieved. And here are a few the people using our banks, are using our data from the World Bank to credit reference agencies, Stripe. US government is now a client. We hope to do another deal with them in the next, a second deal with them for another part of the US government in the next month or two. And typically it's for QA, it's for filling in gaps in the data, it's for enriching existing data, and it's for actually providing a good service, for their end users. So we have some clients making up to 4 million API calls a day, which you can handle without breaking a sweat. So thank you.
We have time for a few questions. One there. The one is scratching. It was a real question.
Thank you. It's Stefan Odermuth from UBS. I'm wondering, having a look at your website, why none of the DACH markets, so Switzerland, Germany, Austria, is covered by your offering. Why, and if there are any plans to change that?
Yeah, there are. In fact, I was speaking with. So the reason is that we get data either by, or ideally we get data via official APIs and so on, and we do this in the case of the UK, in Norway, and we will do it in France and so on. We actually work with a lot of governments, so we work with quite a lot of governments about persuading them to open up. So we think that later this year, the French government is going to open up their company data, and we've been working with them, having conversations with them for the last 2 years. Similarly with Belgium, that opened up last year. It was a 2-year conversation with them. We've been speaking with the Swiss government about this. So I think we'll have Switzerland and France fairly shortly, but I can't give it exact dates, but they'll be fairly shortly. Germany also, we will. Germany was an additional problem. So Germany's system of company identifiers is awful. So basically you have a handler's register number, but it's only unique allied with the district court, the Amtsgericht, that it is associated with. So what happens when you move from, let's say, München to Frankfurt? Well, you register with the Frankfurt and Main district court, and you get given a new number. Well, is there any lookup between one another? Do you know that it's the same company, or if it's a different company? No, there isn't. So one of the things that we were trying to do is figure out how, in a transparent way, to make this available in a transparent, high-quality way is to deal with that sort of issue. And we've been doing a lot of work over the last 2 or 3 months around the quality. And in fact, there should be a blog post going live next week explaining some of the things we've done around quality of company numbers, around doing that. We've now got a solution for how to handle that. And we'll be working on Germany. In fact, we already started working on Germany, but we're expecting to have something to show for that this year. So I would expect those sorts of things to be sorted. Austria is slightly problematic and slightly different. So Austria doesn't actually have an official company register, or they have an official company register, but there's no public interface to it. They basically sell it to a different bunch of companies so there's no sort of non-proprietary access to Austrian company data at the moment, although we hope that's going to change. But yeah, I think Europe is actually. So I think by the end of this year, you'll see that European coverage be considerably different. That's one of the reasons why we're confident that we'll comfortably get over 100 million this year. But by all means, I can give me your details afterwards, and I'll update you with some stuff and the plans with some more details about that.
Just following on from that, what would you like? What would be your ideal APIs, etc., data feeds? I'm guessing death to PDF might make your life a bit easier. But things like XBRL, do they help, etc., etc.? Yeah,
so we're doing quite a lot on XBRL. So the Danish financial data is going to be appearing on OpenCorporates in the next week or so. We're just fixing a few things. So that's already in the back end. It's just fixing a few things on the interface. So XBRL, I mean, I don't know anybody who really enjoys dealing with XBRL. So XBRL, for those who don't know, is essentially it's actually not more than just an XML schema, because there's business rules embedded in it, but it's a way of dealing with financial statements, financial accounts as data. We had to write our own XBRL parser when we started doing the UK stuff, because the existing ones were too slow. So we had to write our own one. Getting that stuff as data is critical. I mean, we need to realize that we live in a data world. We've got a crazy situation now where you can incorporate a company in minutes or even in seconds for a very small amount of money. Yet, if you want to know about that company because you're doing business, want to do business with it, you're thinking of working about it, then, and actually that incorporation will often can be done entirely electronically as data. But if you want to know about this company, about a company, then getting that data, first of all, it will take you longer to get the data, to get the information rather, get the, whether it's free text or PDFs, whatever, take you longer to do it. It will cost you, in many jurisdictions, it costs you more to get the information than it does to register the company. And even though it might have been provided as data, you can often only get it as things like PDFs and so on. So this is the, even though we're all about consuming data and doing things with it, this is the difficulty. So having stuff natively data, and I'm actually pretty proud of Companies House. I think that they are trying to move to a data only. Not just a data-centric view, but so everything is just raw data and data only, and it would be great if other places are doing that. XBRL is not fun to deal with, but at the same time, that's in part because financial statements are complex and tricky to deal with. You've got ones like the SEC, for example. So we've been looking at the SEC data for probably a couple of years now, and we will be doing that shortly. But one of the problems is that they implemented it in such a terrible way that they basically allowed, you can put other tags other than these core tags in there, so that they allowed companies to use any tags they wanted. So if you want to just extract that headline profit figure from an XBRL statement on the SEC, you can do that. You can't do that with a single tag. You can do this with a group. If you do about 20 different tags that we've looked at, you get about 90% of them, essentially, because people can use any arbitrary tags. So they allowed it to be implemented in such a bad way it made it difficult. But PDFs are a complete pain in the neck. So the work that we've been doing on the GSIBs in this is kind of interesting, and I'll be brief. But when you look at let's look at something like BNP Paribas. So there's the information that's available. It's stored as data, and we can easily turn it into data. The Federal Reserve have got about its corporate structure, and that's basically the US and related entities. Then you look at their published quarterlies, which they have a list of subsidiaries on, and that's got accounting consolidation in there. And that's got a list of, then there's an SEC filing, and it's got some stuff in there as well. And then you've got the published quarterlies, which have also got another list of subsidiaries, which are subsidiaries under accounting consolidation. And then finally, you go to the company register, and what do you get there? You get actually a complete list of them, but printed, it's actually a bound document that's been photocopied or scanned. So everything's on an angle. There's some bits that are cut off at one side. So and that's the complete list. Now, so it's not a secret what the complete list of BNP's corporate structure is. It's just that it's made darn difficult to find it because there is no OCR technology that can take this stuff, get the right angle, figure out what the bits that are cut off are, figure out what the relationship between this is and between the accounting consolidation and that other stuff. And that's why we're having to do some of this manually. I don't think at the end of it, we think already we've got some incredibly good data for this. But really, I mean, honestly, I mean, I think we could be asking the banks to, particularly the GSIBs, to be disclosing as native data, well-structured data, what their corporate structures are.
We have a last question and a quick answer.
Okay.
Thanks, Chris. You mentioned that the data is being used or can be used for onboarding and KYC processes.
Yeah.
To get a sense, are there a lot of banks that are already using this? I'm sure you're aware onboarding and KYC processes are a horrible headache for banks. And I can say, having set up a lot of companies with banks, it's an incredible, painful process from the outside as well. Is it something that you're seeing good adoption? You're obviously trying to inculcate the community here.
So we've been talking with some of the banks and also some of the intermediaries. I mean, as you know, becoming a vendor to a bank is in itself a pretty painful experience. And I would say we're on some of them where, if that's starting the conversation and that's, doing the deal, we're about there. But already we're using, so apparently HSBC have got something like 20 people in Bangalore using OpenCorporates for onboarding manually, just using the website, right? So they're already using it because it's more effective. You can do director searches for Indian data, for Indian companies. It's quicker, it's more reliable. It means you can do direct reverse searches of, given this company, these are directors, what are the other companies that those directors' names? So they're already using that. And we know because we have to occasionally block heavy use bots. We basically had almost like a DOS type of attack. But so occasionally that blocks people, and we got an email from them saying, hey, look, there are 20 people here in Bangalore that we need to have access again that are using OpenCorporates onboarding. So we know that. We know from some of the other banks that they're using it. Some of them are using for onboarding, some of them are using for investigations, some of them are using when essentially something is escalated. And we're also talking with other banks about essentially incorporating this in their workflow, and they're quite keen to do that. It's just a question of, from the conversation to the end of the conversation with a bank is, well, if you did it in 12 months, then you'd think that was really fast. So, yeah.
Thank you very much, Chris. Thank you.
Thanks.